What is good? In today's video, I want to go over something that I think a lot of people misunderstand. Whenever we're taking funded challenges and we're trying to do our best to consistently be making money quickly, because most of the funding firms only allow you 30 days, sometimes you need to be a little bit more active in your trade management than just holding out to the last TP. Now, a lot of people are going to disagree with me, but this is how I got funded. And I'm starting to try to teach some more discretionary stuff with you guys and share it. While it is hard to make certain things mechanical, I can try my best. I think the key to it is kind of setting whatever principles you have as far as like what your goals are in trading or actively what you're doing, whether you're passing a funded account, whether you're trading on your live account. And a lot of people will say, oh, you shouldn't trade any differently. And, quite frankly, I see the logic there, but most of the time, those are people who actually don't trade. And that's just my opinion. Now, I'm not saying you need to just TP early and get scared every single time that the market isn't going exactly your way. And I do believe that you need to let the market do its own work, but there is a time and a place to actively manage your trade and maybe move your stop loss up, maybe take some profits that you weren't going to take because, let's just say you have trades that run 2R, 3R, and they come back and stop you at a break even or for a loss. It only takes a couple of those to pass a challenge. We're not trying to swing for the fences here, right? So let's go ahead and get into the chart. It's thunderstorming like crazy where I'm at. So this was a trade I took this morning, and this wasn't to pass a challenge. This was just on my live account. This is how I still trade. A lot of people, I'm going to get people tweeting me and disagreeing with this, I already know, but whenever I'm in a trade and I have a target, and especially in a day like CPI, and I don't want to inspire people to trade. If you notice the times I trade, and we're going to go over an ES trade I took too, it wasn't before CPI. That's just suicidal. And I'm going to go over all the bias. But the first thing I want to point out is I cut most of this trade. Let's just see, because I posted in the Discord. So out here, and this wasn't a signal. I don't want to mislead anybody. This is just a trade I took. I was talking about it in the stock chat, and I said, fine, I gotta look at my name. Stock chat's always booming. But I had taken all the profits in this area. I want to give an exact timestamp whenever I said that. Or better yet, I can just go to my fucking. Hold on a second. $51 is where I took them. Right in this area right here. So the reason that I took it was because whenever we have a large push to the downside like this, and the overall bias was, I'll go over the S&T and a little bit more, but I talked about this on Twitter yesterday, this daily fair value gap, right? So we tapped into it with that CPI push and then tapped into it once more. Now, we did get a sweep into the zone, but to me, since we didn't come down like right here, and I'll look at ES too. I want to use ES for kind of inner market analysis. ES to me, this was pretty bullish, if you ask me. Like that reaction from that order block. And also if you look at time, and I'm going to go over this more in the time and price video I'm about to release, but whenever you're looking at points of interest and you're kind of determining, is this the whole point of what we're doing is trying to track institutional involvement, right? So if we look for trades at a certain time of the day, because we're anticipating institutional involvement during those times, whether it's kill zones, or the 9:30 open, whatever it is, if you're looking for a certain time for price to give you your model, well then whenever you look back at old points of interest, for instance, if your model is a liquidity rate into a point of interest, well, don't you think it's a little higher probability if that point of interest was created as one of your other models was unfolding? So what I mean by that is if we are trading indices and we look for liquidity rates after the open, usually before 11, and then we see something like that, and where does it rate into? Rates into an order block, which is a point of interest that was created during that same time window in the last trading session. So you see how, okay, well, if we're anticipating institutional involvement around here, and look what we did off this order block. We took liquidity and expanded. That was where the move of the day began. So wouldn't you say there's a high probability that institutions were involved there? So there's orders that are probably going to be mitigated. So whenever ES pushed down into this level, I'll go over the ES trade first because this is the first one I took. And this is a model that I want to, actually, I want to stay on task. That was the overall bias that we might go higher. So when I got in this trade on an NQ, it was after the ES trade. This is the one that I want to share my thoughts on management. So we'll go back to ES. But so the overall bias for the trade was we had this SMT divergence. So if you look right here with, can't remember if it was Dow. Yeah, it was with the Dow. So we did not make a higher high on the Dow. We did on NQ. I think ES obviously did as well. So to me, that was the first bias. So we came down and we created a balanced price range. So we'll go over one more candle. When you see something like this, we have one fair value gap and another fair value gap. And we're talking about imbalances, right? It's because price has not traded through these levels, right? So until we came back down, this was a trading range where only one side of liquidity was offered, and that was the buy side. So now we have this massive push down and we're balancing that price range. Price has traded through it. Now, there shouldn't be a reason that price should just blast back through it unless some liquidity has been taken. Now, there's two areas of liquidity here. I think the common target, and which is what my end target was this low. Now, a couple reasons why I took profits and set stops break even, because every trade is different. So a lot of people would say, okay, well, we took the buy side into the POI, which is the daily fair value gap. We had SMT, we had a balanced price range. This is free. It's going for the sell stops under these lows. But what you have to understand is, for one, it's CPI. For two, ES is telling us up. And on top of that, we're just looking for price to move from imbalance to liquidity to imbalance, or, we're watching price actively. We're not just going to set our limits here. I'm not, and just hold, till the pits. So just because this isn't much of a move, it's just 1R, doesn't mean that you can't make good money off that or pass funded challenges off trades like that. Now, this is going to be another unpopular opinion, and this is something that I even am coming more to terms with. Yes, you can get 10R trades. Yes, you can get 5R trades. But if you understand price and you genuinely, consistently look at price and say, this is what's about to happen, and you notice that you're right most of the time, for a 1-to-1 ratio, you just have to be right about 60% of the time to break profit. Now, you want to be right more than if you're doing only 1-to-1. But that's not my point. We're not going to be only doing 1-to-1. But you can take profits at these levels. If you're hitting 2 to 3 trades like this in a day, you're going to pass a funded challenge relatively quickly. So, I looked at this as SMT divergence, balanced price range. As price traded back up into it, I watched for a push out of it. I didn't use any market structure. As soon as we hit into here, really, I was in that 1-minute candle. I just marketed. I'm sure my entry was probably a little different because of spread. This was just me mapping this out. And I saw no reason to go above this balanced price range. Now, to be honest, I could have put my stop loss a little more tight. Now, that's one thing where I look and I'm like, okay. But, it's CPI day. It's automatically lower probability conditions. And I didn't risk my normal risk on this. But I like the setup. So the reason that I said I'm taking 50% off here and breaking my stops is because ES was bullish overall. We're making, yes, we had SMT, but we're still making a higher high with nice displacement. So that tells me we have a good chance to go higher. And, we look at this was kind of a news-induced, raid on stops. So there's probably institutional involvement down in this area. So price moved down, 50% off. Now, as price huddled around here and it stopped, this is where, if I took 50% there and just got break even, that's not really much. I mean, it's still adding up, like I said. But as price kind of got back and down in here, it was 951 right here. When I started to see that reaction off of this candle, and if we look at this candle, and this is, you can just look at this as if you'd like to look at it as a rejection block. I usually don't use those. Notice how we started pushing right off that equilibrium. And again, this is where it gets discretionary. A mechanical way to do this would have been to wait for the shift to exit, but I just exited right here. So, yeah, it could have been a little farther in terms of risk reward, but just be based off of kind of understanding, or at least being confident in what I think I'm understanding, I was able to secure those profits and not just let them get break even, because the trade did indeed get break even. And I expected the market to go higher. I was going to look for another buy if we came down in here and got our pattern, but we did not. so I didn't break my rules in long this, even though I was watching this like, damn, this is going to go, right? Because again, you don't have to take that low. You know, if we're looking at news-induced price action, it's going to be a little choppy, a little sloppy. But notice I would have got stopped to break even if I wouldn't have taken my profits down here. So the moral of the story is you have to be aware of your surroundings, and you need to be nimble, and don't get so robotic that you're not able to be real with yourself. You know, if you're looking at, and this is something, a lot of people that are very new don't, there's a fine line between watching your trade and just getting scared and just closing your trade. Now, don't ever do this with stop losses. This is one thing I want to be very clear on. Let your stop loss always do its job. That's what it's there for. And people can say the same thing about take profits. I get it. But whenever we are looking at something like this, when we're this close to a win, you know, I don't see as much wrong with that as, you know, if you're very close to your stop loss and you close it, because, you know, the reason it's there is because you're saying this idea is valid unless it goes above that level. And to close it before that is completely redundant. But if you maybe have misshot your target, you know, the trade, if you have target partial targets, you know, if it hit here, you know, it's a profitable trade. You made 50% of that position. If it, let's just say it hits that and goes right back to break even, you know, that's okay. So just because your targeting is not hitting your full target, that's not as much of a trading error as closing your trade early before stop loss. You know, the thing I want to instill is don't just take this and run with it. You know, I wasn't even going to talk about this because I feel like a lot of people would take it the wrong way, like, oh, like that, I want to get scared and close my trades early all the time. And that's not what I'm saying. But, you know, when you have a logical reason to, when you're monitoring your trade and you say, okay, like I have a pretty good idea that, you know, I'm in deep profits, this is going to turn around on me. Yeah, there's no harm. Now, another mechanical way is if you were to see something like this, right? Market structure shift. This over here, fair value gap. You saw something like that, you know, maybe not. And then here's another one, right? Taking out this high over here, and this would be like your long-term highs. Terms of this little consolidation we had is very short. So at that point, you know, a reversal is expected. Now, if we're looking at S&P from a bullish standpoint, we're expecting a higher high, right? It's lower probability because of CPI day, everything's just a little sloppy, but that's what most likely would happen. So that's my thoughts on whenever you're on a funded challenge, you know, if you just a couple of those that you don't take those profits on, and this is more for like low risk reward intraday stuff. It's not, this isn't for, if you're in a swing, don't do that. If you're in like a days to week swing, it's different. But if you're trying to pass challenge trading indices especially, there's gonna be a lot of trades that, you know, you have that turn around on you. And, you know, just a couple of those trades, taking those profits and chipping away is how you're going to be able to pass those accounts. Now, this is more, again, this is more for like a scalping, you know, day trading strategy using ICT stuff. There's a lot of other strategies that may be different, so don't try to take what I'm applying or saying and apply it to something that I don't do. So there's that. Now, ES, the trade I took on ES was just solely based off the fact that we saw this displacement down right here into this 15-minute order block, and we explained earlier in this video about why this is relevant because of the time it was created and that it was the basis for the move of the day yesterday. So as soon as we got this displacement off of it, right, you know, you could look at this as a structural shift, I guess. I wouldn't. You know, but price came up, and I watched this kind of just sit here, and I almost didn't take it because another thing that I'm trying to make mechanical is using rebalance theory, basically price trading into a fair value gap and trading out of it with aggression, or trading down to the bottom of it and trading back through it. You know, that's whenever a price range, you know, it's rebalanced. So, because you want to trade down through it and then up through it, right? If I would have been a little bit more, I guess, confident in that execution, I would have executed it probably right here in this candle, right? Because we went through it, came back up of it. So that the price range is balanced. So the whole idea from an imbalance that there was no trading going on and only one side of liquidity was being sought after. In this case, we're coming up mitigating this order block and this imbalance. So, but now we came back through it. So now, and then we pushed it again. So now it's balanced. So price shouldn't theoretically, if price is bullish. Now this is the key. If price is bullish, it should not go lower than that. So I just used the bottom of this fair value gap candle, targeted this liquidity. On MFF, it hit before, one of these can hit before the actual high. I don't know what was the, I guess it was US 500 was just acting different. But Yeah, so and the reason for the targeting the high was because if we take out the sell side into a point of interest, we're going for the buy side if price is bullish. Now, that is one thing that ICT used to say that would confuse the fuck out of me. Because if you look at the chart, you could say, that's not true. Not every time that we take the sell side out and go into a point of interest, we take out the buy side. It's if market structure is bullish, right? And at this point, if we're looking at it, go back to where we were, market structure to me is still bullish overall. Not internal structure, not, but if you look, we're really expanding off of, here's the London, that was a nice power of 3 yesterday. I wasn't trading yesterday, but, we see this push down yesterday. So we're seeing price take out sell stops, trade into order blocks, and expand, right? So price is overall bullish at this point. Maybe not from an immediate internal structure standpoint, but when we're looking at it from, what order flow is being respected, that's the way I look at it. And on top of that, we have this daily order block, and I marked the entire candle in the zone, but we didn't hit into the actual body. So regardless, if we did hit into the body, I still like a sweep. You guys know that I like a tap and then a sweep into it. You might not always get it, but that's what I usually look for, because somebody that trades off of this, if they're trying to sell here, obviously it's so obvious where their stops are going to be. There's a ton of people who have stops right here right now, so price is likely to draw back to it. And if it doesn't, then you revisit where price is likely to draw to based off of displacement structure. So that was my logic for that trade. Thanks for the subscription, Sawyer Gainey. Now, David Johnson, I'm sorry, I don't know if you're joking, but he said, blew my account gambling on CPI. Anyone want to give me a small loan? Phew. I can hit up, what's that, California check cashing. They used to have all those fucking ads. What's up, everybody in chat that I just now looked? That was the kind of the only directed part of the stream that I wanted to go over, and that was something that I decided to talk about after this morning. But let me look at the chat. Okay, never mind. Sorry, you can't hear me. I saw Fetty say couldn't. I was like, bro, have I really been talking for the whole time in Discord? Nobody can hear me. But okay. What's this right here? Yeah, that was my logic for this. And notice I'm not saying to trade CPI. I didn't trade till after, right? I'm not gonna say and tell you not to trade the entire day, but So overall, I haven't really looked at everything except indices. So where DXY is at is going to be pretty interesting. So if we displace like this, under the, like really where we're at, and we just close like this, I mean, I could see us drawing down lower on DXY. And this is something with crypto, I still could see crypto going higher. I mean, I think that we might retrace a little bit off that high, and I'm trying to be patient, because even myself, I got a little FOMO watching some, because I wasn't trading actively for most of Monday or Tuesday or Wednesday. And it's like every fucking time I do that, it's just the market does something crazy. I mean, maybe it just seems like that, but I started being like, damn, look for some longs. I was like going down my watch list, like, damn, this looks good. Like maybe just cop some equity. And I was like, bro, just wait, be patient. I will give some setups I'm looking for though. I'll show you guys. XRP, which Glacier and Playbit already got us in, but I am looking for another position. Now, I wanted to see a displacement over this high. Oops. Right here. Oops, no, okay, that's right. I want to see more of a displacement. We're not getting it now. Okay, there it goes. Sorry. Make sure it's good on Discord. My mic loves to do that shit. Audio's a bit laggy. I don't know if, I mean, it's storming like crazy where I'm at. This mic, dude. Hold on. Is it better now? That's good. Yeah, I don't. I mean, my mic was like unplugged. This mic is, it's good quality. It's the HyperX Quadcast. I don't want to like bash it too much, but it literally just turns off and on. And I used to think it was my old PC's USB 3 ports, but I got a new PC and it does the same thing. So it just cuts in and out. Let me see if it changed the settings, because sometimes when it does that, it'll turn on echo cancellation now. Should be good. Let's see. Let me test it. I don't know. It should be good. Is it? Let me know if it keeps doing it silent, or anybody. I don't know. It's shouldn't be doing anything. Or if anybody on YouTube, if it's doing it there. Okay. There's a couple things I'm missing. So, nice trade. Yeah. Oh, what's up, Haas? That's you. What's up? You probably fucking killed it too. Do I trade challenge accounts more aggressively than funded accounts? Absolutely. And there's a lot of stuff I just kind of hold my tongue about because I don't want to like induce people to do stupid shit. But I can't help it if people do stupid. I'm just gonna share the way I think, and I don't mean you know, you need to take it in context. So like some people would say, "Oh, Casper said to go fucking DJ on funded challenges." That's not what I said. I said I trade more aggressively than a live funded because you have a time limit. Now with my funded forex, I think they took off time, or they did take off time limits, so that's different. But you know, if you have 30 days, I mean, there are a lot of good trading models or trading strategies that don't get 10R in 30 days if you're trading one pair. And there's a lot that do get that as well. But, you know, for those of the people that are trading on a time restricted challenge, you know, you're going to have to be a little more aggressive. Now, my version of being more aggressive is that, like I was talking at the beginning of the video, I take profits a little differently. But even that, I do that on my live a lot of the time too. But the biggest difference is how much I risk. So on a challenge, I risk 1%. Now on my funded, I just risk 0.5%. So, and then I cut that in half if I go to drawdown. But you know, at the end of the day, to me, it's like slow and steady wins the race. You know, 1R at 0.5% at the base level is $1,500. So you know, it's yes. Sometimes I look at it and I'm like, damn, you know, you should be risking more. But that's just my strategy, how I do it. It helps with psychology. It also helps with if in the cutting it in half helps if you do go into drawdown. But yeah. Somebody asked, can I please explain displacement? So for instance, if we were to just to reverse here, price just kind of came down, that wouldn't be displacement because we couldn't even close a candle above this. Now, just because we close a candle above something doesn't necessarily mean displacement either. But like, okay, I'll give you an example. So like this right here, this big move down right there, that's displacement. You look at that and you say, okay, something happened there. Somebody entered the market right there and pushed it down for whatever reason. Now, usually you're using that to determine A, if your POI that you're trying to trade from is good, or B, what price is seeking out. So for instance, as soon as this happened, you close this candle down here, you say, okay, well, we're seeking out this low, and you see what price did. Now, for whatever reason, now look at this. We took out the low and pushed back up. So that is not displacement. Now, if we see something like this, oftentimes you're going to see this hit because if we fail to hold displacement under a low, then this high is likely to be targeted. Not always, or you can at least look at local highs, like the high that pushed it down. Now that's a little bit more of a stretch up here, but targeting this high, which already hit, is not, because you know you have this little range, right? You have your deviation, and then you push up and take out the high because you couldn't displace under that low. You couldn't hold it there. So if you don't hold the price there, oftentimes it's just a rate on liquidity. So, you know, that's why I want to see displacement here, so I'm not buying, you know, and becoming liquidity. So if I were to see displacement up here, I would start to look for buys inside this gap. Depending on how, if we make a lower low today, it'd be different, but I would look for buys inside this gap, and I'll look for 4-hour levels around that area. And if you see, we have this whole sell to buy range coinciding with that. So whenever I see a 4-hour level coincide with the daily level, it's automatically a high value area, in my opinion. So, you know, but I need displacement of that high on the daily. So, you know, XRP, I've studied a little bit because the price actions, it moves very well, but I've noticed that it's very wicky on the futures charts. So we'll see, but that's what I'm waiting for on XRP. Optimism, overall is just a pretty strong coin ever since its inception. I mean, yeah, it's had its retracements and stuff, but you know, I look at it overall as still a very bullish range that we're trading within. And if you look how we're reacting to optimal trade entry and the bullish order flow that's being respected, you know, price is overall pretty bullish. Now, we already tapped off this whole little sell to buy range right there. We didn't get a sweep. So the best scenario would be if we could maybe come up, take this high, and then get some kind of retracement to get a short entry. That was something else I was watching for optimism, but eventually I'd really like to be a buyer of optimism. At this time right here, you know, to me, the overall structure of the 4 hour is this, and we really are trading up into this order block right here. I'm not super eager to short crypto, to be honest with you, because if you look, some people might look at this and say, okay, yeah, we took out the high, we got a raid inside of the 4 hour POI, and you pick this high and you say, oh yeah, we closed under it. To me, this does not look like it's going to go lower. You had this massive, I mean, it definitely could, but to me, it's like you came down and now you're trading back up, and if you get above this high, now if you start to displace more, like if you see more structure to the downside, displacement forming, it's clear, then yeah, you might want to look for shorts, but until, you know, this wick right here to me, even though he came back down, but we're just testing. It's kind of like ES this morning on the lower time frames. So again, I just want to see where we go with that. But OP is another chart I am watching. ZIL is another big chart I want to watch that, depending on the price action when we get down here, I might even grab some equity. Just because the way I look at it is we came down, we've swept out nearly every last bit of liquidity that existed into this weekly order block, swept these equal lows, and you see the reaction we get off of this, right? So we came down. If I drew that whole weekly order block, you know, all the down candles, little sell to buy range, we did get a sweep of this low into it, and then it's just that massive expansion up. You know, that to me, we kind of took out price there. Now, it could be just a rebalance here, so that's why I want to wait till we get down here, because we're really using the daily to try to kind of anticipate more of a weekly move, because we have this fair value gap that could easily send us down. But you know, I want to see how the 4 hour reacts once we come back down to this zone, if we do, and then you can watch this fair value gap as well. But something else to keep an eye on. Now, another thing that I am pretty this is probably the setup that I'd be watching the most is Bitcoin dominance. So I haven't really ever traded it too much. I watch it from time to time, but I like this setup. So if we look here, we came down, we took out this low, swept it again, and we failed to displace. This is on a weekly chart. We're failing to displace under a low. We're trading into an order block, and we're getting market structure shifts to the upside. So that tells me we're bullish and we're reaching for something on this time frame. So, you know, what is that something? Well, I don't see anything except this fair value gap. So I like this as a weekly draw on liquidity. And if we look, we came back, we took liquidity right here, nice shift and displacement above it, came down. We're now tapping into a daily order block. And we also have bullish structure on the daily, right? Pretty clear bullish structure in my opinion. Now we're back down to this order block. And the only thing that stopped me from longing it just off the rip was I want to see a sweep of these lows. They're too clean. I might end up getting left in the dirt. So be it, if that happens, if we start to see more displacement, I might try to look for an entry, but I'm trying to be patient and wait for my model, which is a sweep. After we've initially got this laid down, price moves up. Because again, imbalance, right? Rebalance liquidity. So that I want to see us, and after, if we do take this low, right, these lows, I want to see a very sharp push out of it, taking out a recent high. That will give me enough to frame along. This is probably the better setup that I like. And also, whenever we look at total, excluding Bitcoin, I think that it could see some retracement soon because we have all of these highs. And this is just alts, basically. We have all these highs right here we're taking out. So, and we have an imbalance up here. And alts have been running way harder than Bitcoin. Bitcoin's been running, but alts have been like I mean, shit, we have like paybacks, you know, going massive. I mean, it may not look like it, but I mean, I think it was like a 42% move in, what is that, 4 days? You know, really 3 days. Most of it was in these 3 candles. But I could see Bitcoin dominance. I mean, for those who don't know, Bitcoin dominance is just the percent of the market cap. Not, I know this is a number, but it's weighted by the percent of the entire crypto market cap that Bitcoin accounts for. So, how's the daily price action on Bitcoin? Let's go ahead and take a look. So overall, the weekly range is pretty wide. So I'm not going to consider this a new range. This down here, I just see this as consolidation. And we have this massive push down with the FTX scandal. And we pushed back down into, I think it was a monthly fair value gap. Yeah, and this monthly fair value gap here. And everybody's bearish as shit on Bitcoin. So once we get a push down into that, we see this consolidation. And now we're pushing back up. Now, we do have this impulse structure that we could just, go into this imbalance and, go down to the downside. It's very possible, right? But if we're looking at the monthly chart, overall, to me, I would consider really all of this one range from COVID to the top. And I'm not, the economy's fucked right now. There's a lot of crazy shit. I'm just going by the charts. I'm not sitting there telling you Bitcoin's, a bullish range. We're just going to go to the highs. I don't think that. But I am saying I think we have some room to retrace at this point. Now, if we look at the weekly range right here, we have a very wide range with liquidity front-running premium pricing. And then prices kind of came down. We rebalanced into this fair value gap. So we have that. Now, we might not see that because that's kind of the breakaway gap, and here's the measuring gap. If we see this, we'll likely see higher pricing. But so I'm not going to go that high. But what I do see is prices in a discount. It's hugging discount on both the daily and the weekly range. And now we're starting to get prices coming down, forming highs, and taking those highs with displacement, and we're starting to respect bullish order flow on a daily chart. So I could see price even going as high as this high up here. And again, we're just we want to take it step by step. We're not going to buy Bitcoin here and just target as high as possible. We want to see what happens above this high because we're coming to this fair value gap, and then really once we come back down into a discount of this recent impulse in the daily, we want to start seeing the 4 hour, the 1 hour start to shift bullish and respect that bullish order flow if we want to see higher prices. So that's where I'm at on Bitcoin. I'm just kind of sitting on my hands right now. I misordered this week. I'm looking at this 15 minutes going for that high. Equal highs right there. Everybody that's shorted and trying to short CPI is going to have their stop loss right there. And if you see right off that order block, I mean, it's pretty clear we'll see those highs again, in my opinion. Now, somebody asked, oh, you didn't trade Haas? Dash? Yeah, I got you on Dash. At a leaky. Let me look at the long. That's funny. I almost just said it. Silent said long now, target all-time high, 1 second entry, 7,000 restore reward. Just kidding. Okay, let's see. So Dash, well, yeah, Dash. Why Dash? What chart is this? Okay, no. That's right. It's perps. Yeah, it is. So took out all this liquidity, and we came down here with consolidating in this liquidity pool. Not really coming as sharply out of it as I'd like to see for some kind of major reversal. When I look at the daily chart, to me this looks like a pretty clean power of 3. So I think the overall draw on Dash is 58.50. Now, the reason for that is we see this massive consolidation, right? That is then sponsored to the downside with a manipulation, and we push very quickly out of it. If you see, we didn't hang out here for long. There wasn't many entries. If you were trading, you're waiting for this shift, you didn't get an entry down here. If you're trading something like this, yeah, you got an entry, right? But that's just clean. So, I mean, to me, we're going for these highs. That's just the way I look at it. So I'm looking at that as the draw on liquidity, and I've got a I think it was, where is it? I'd like to see us come back down a little bit. And again, we don't have to because we tapped into that whole down move. So I haven't looked at this chart in a while. But I've been Dash overall, I like overall. So I mean, really, you're respecting all these order blocks. So we have this down move right here that created an up move. So that whole range, you know, we've got equal highs right there, or I mean, sorry, equal lows. So we could maybe even refine this down to this. I'm gonna send an alert for that. Won't necessarily require that to get involved, but that looks good. So we have those equal lows front running this actual last candle before we really started expanding. If we go to a 1 hour, it's probably gonna be a cleaner. We had this push down, push up, and that last little range really was this to this. So that was the true down move that, you know, swept liquidity from these candles and then expanded. So we've got liquidity front running it. I like that zone overall. Now, if we don't get that and we just start holding displacement above these highs, if we look, we are still at an internal level making higher highs and higher lows on a 4-hour chart. So because we've got right here, and then now we've shifted up, and now it came down in the order block, seem to be seeking this high right here. So if you're more on like a day trading scalping level, you know, you could have said, okay, I'm going to trade the 15-minute. Based on the 4-hour, I should see higher highs up to at least to this high. You know, because if you look, and this is just 15-minute structure too, just like we look at a daily chart. You have optimal trade entry, price traded into an order block and this imbalance, expand it off of it. So a lot of different ways you can attack that. I don't know if you guys might even be able to hear the rain. It is fucking pouring right now. But yeah, so I think that pretty bullish on Dash. I just, again, I'm trying to see some form of retracement to get an entry. But if I start to see displacement above this high, that's when I'll just basically try to get that silver bullet, so to speak. Now, also another thing, see this. No, actually. No, I like Dash though. Overall, it's a 58.50. Yes, the video will be saved. It'll be posted up too. Somebody said how to trade. I'm a total beginner. I'll just be honest with you. There's no way I'm gonna be able to explain that to you right now in this video. But if you want, I have the whole like private class library in Playbit. It goes literally starts at the beginning with market structure, and we go into everything from, you know, time theory to trading psychology. So if you want, you can get a free trial to the Discord. The link is in the description. Just use code Casper. Thank you. I trade challenge accounts the same as I would a funded account and get frustrated because it takes so long trading so conservatively. I just want to be very clear because I don't want to say stuff that people take and then go just do something crazy. I'm not saying to do like degen shit, but I am saying just you know, monitor yourself, but don't be afraid to take part. You know, if you're up, let's just say if you're taking a 200K challenge and you're at 210K and you're in a trade that's got you to 215K and the market's just sitting there and your target was only going to get you to maybe 216 or 217, fucking take it. Like, you're that much closer to passing. It's not about you know, min-maxing everything. That's what smart money does to a lot of people is they see stuff on Instagram and, you know, Twitter and it's like 15R, and while that is possible, it's not going to happen every time. And, you know, there's nothing worse. I'd rather get stopped out than watch a trade go from profit to a break even. If I, you know, if it's a small profit, you know, just pumps up and goes stops it, that's whatever. But I'm saying if you're up, you know, like 3 to 4R and you're just sitting there like maybe I should take it, and you don't take it and it goes down, like that shit is fucked up. That's the worst, and it fucks your psychology up. Maybe not everybody, and you'll get better at it, but even me sometimes if that happens, I'm kind of like I get a little frustrated, which is something that I definitely try my best to work on. Dash looks good though. This looks so good. I'm actually gonna post something on Twitter.
This is gonna sound like hypocritical, but like there was I was watching a podcast from like one of the traders who's been trading for 20 years, and he's like, you know, people tell me I wish I TP'd here, I wish I TP'd here. Don't say it, do it. So wait, actually,
Glad you brought that up, Adeliki. I'm gonna add this to my current. I just want to keep forgetting about it. Bitcoin's taking out the high right now. Okay, there you go. Oh, wow. Holy shit. Yeah, it's fucking moving. I'm guessing the stock market's pushing too. I don't like that. Oh, there you go. That happened pretty quick. God damn, it's ripping. What's the crypto doing? Bitcoin dominance. FOMO. No, I'm just kidding. But yeah, overall, everything looks pretty good on crypto. Looks good. I won't even lie. Now we're getting those decisional points where you could reverse, but you know, overall, until we stop respecting bullish order flow, you know, I'm not gonna try to short things and catch the top. How can you passive funded account? Well, develop. First things first. You need to develop a strategy. Like if you just buy a challenge and you don't have like something you can write down and say like, this is why, you know, this is what I look for when I get on the screen, and this is what it takes for me to get into a trade. And if I don't get that, I don't trade. If you don't have that, you shouldn't passive funded. I mean, shouldn't get it funded, because even if you do pass, and you're at that level and you're trading, you will lose the account. I promise. That's not, whether it's before your payout or right, I don't know, but you know, if you have that mentality that you're just gonna, you know, you're thinking more about making money from the funded than you are developing a strategy where you can consistently make money and trying to learn, and you don't want to back test and you don't want to do all that stuff, then you're not at that level yet. You might pass the challenge, right? I mean, hell, somebody could fucking have shorted CPI or long CPI with 100 lots or something and on NASDAQ and pass the challenge phase 1 in one go, and that doesn't mean they know shit. It doesn't, you know. So something to keep in mind. Let's see. Oh, I'm not talking about you, bro. I'm not. You've been like that, Chapo, but you're killing it now. I'm not talking about you at all. That's most people though that take that was not talking about you. You're doing good, bro. But oh, player. Wait, you said can I hear you? Hold on. My bad. I don't have my fucking headset on, bro. All right, now I have it on. Are you still
No, I
there?
was just saying. Yeah, no, I was just saying that people. I was watching an interview from someone who's been trading for a long time. He said people tell me like, "Oh, I wish I TP'd there." Like, don't say it, just do it. Like a lot of
Yeah,
times.
bro. And like, you know, it's just one of those things that like when I try to teach or try to talk about things, I know that like somebody, okay, like if I say that to you, you're gonna understand what I'm saying. If I say that to the wrong person, they're gonna be like, oh dude, Casper said every time that I fucking get scared, I'm gonna close my trade. You know what I mean? Like
Not
there's
to be
a
mechanical, but
yeah, yeah. There's now I will say stop losses I think should remain. That's just me now.
yeah, yeah, I agree.
Because, dude, like for instance, and you should have a mechanical way of break evening your stops. Like I talked about the way that I do that in the class, but
Yeah,
the
I asked you about that. I remember that.
yeah. So like, dude, there was one week. Robbie and Glacier will remember it. It was like
Was it
three
11K
trades.
week or something? You said something.
Yeah, it was like that three trades where I would have literally made 11K, and I just got stopped to break even on all three, and I was like, bro, that fucked with me. I was like. I remember I was pissed off, and I usually don't get. I mean, I wasn't like angry, but I was just disappointed in myself. I was like, what the fuck, bro? You just fumbled the bag, and it was like in the first couple weeks I was funded too, and I was like, dude, you're fucking up that fun, and it's that funded psychology will start making you do shit.
Oh, even better, bro. You were talking about stop losses. The CPI, whenever news comes around, then no SL strat's the best. Like no stop loss. This no, it's
Oh
not
yeah, the
necessary.
news is just gonna destroy everything.
Yeah. Like I just don't use a stop loss on during news because it has to go my way. So it's a strat. It's a strat.
That's a great risk management there,
Yeah.
dude. Yeah,
A
Bitcoin
full
ripped, didn't
margin.
it?
Full
Oh my,
margin.
dude, look at that 5 minute candle. FOMO. I'm just kidding. TP. Dude, DXY is I think it's drawing to this low. And this is another good example of something. And this is totally left, so I might not get this right. I mean, it's not like it's that hard to point this out. But so one thing I used to do was like if I'm looking at this bit of price, let me just go to like USDX so I can have a better, cleaner chart. Oh, it's not, well, actually it's similar. So if I'm just looking at like this bit of price action, and I'm looking at, overall, my, external swing structure here would be like, I would say like, I would just really include all this. here, big push up, big push down, push up. So if I'm looking at all of this as like my, fuck that one up, as my swing structure, right? You know, a lot of people, what I used to do is like you just always look at the bottom as the where sell side is residing. And while that is the bottom always does hold sell side, but it's not always the only area that you can see a very sharp reaction from if price is to you know, remain bullish. Now, in this example over here, we're looking at this. You know, where did we move the most aggressively from? Did we move the most aggressively from right here? Is this aggressive or is this aggressive? So you have to ask yourself, you know, if we're putting in a big push, there's going to be stops right there. There's always going to be stops at levels like that. So if you're trying to target something and you're going for low-hanging fruit, that's what you target. Now it looks way closer on. Is DXY just like dying right now? Okay, never mind. It's about the same. But I think that's what we're drawing to. Yeah, if we don't start, I mean, you know, when we're looking at this, I mean, fuck, man, DXY could go lower. I'm interested to see how this week closes because if DXY does start to move lower, you know, that's going to be pretty nice for equities. It's interesting. And I mean, crypto, I mean, I'm just being honest with you, crypto looks good. And we're getting to that point where it could start looking bad really quickly, right? Because we could see a bearish power of 3, you know. So that's why I'm trying to not FOMO into things. You know, Glacier and Playboy got you guys into some fucking badass entries on multiple things. So I'm kind of just chilling right now. Because, you know, I could see maybe this was just accumulation, would come down. But, you know, no reason to try to forecast, just better to react. And Chapo, I just saw his messages. Yeah, we're gonna get matching watches, bro. Let's run it. What do you think about the 15 or wait, what do you think about this? 15-minute point of interest, 3-minute confirmation choke, and enter in the 3-minute for a 2-to-1. Sounds good, but I think you're missing it. I'm sure there's probably more to that. But you know, what context is a 15-minute POI in? Is it in a bullish, you know, are you trading pro 15-minute? And if you are trading pro 15-minute, is it pro 4-hour? And if you're trading pro 4-hour, is the 4-hour pro daily? And then is the daily the pro the weekly? There's a lot of different things that you have to think about. Like if you really want to make something like, you know, if you want to test something that's super dialed, you know, think of it like you're trying to teach a machine something. If you just say 15-minute point of interest and 3-minute confirmation, it's going to trade every single fucking 15-minute POI that gets 3-minute confirmation. And I'll go ahead and tell you that will not be profitable. I mean, maybe it is whenever you're trading and you can test it and tell me like, hey, you're wrong. But there's a lot of context. I tweeted that this one. Context in trading, like in price action trading, is everything. Like you can have the 15-minute looks great, but why does it look great? Is it just retracing the 1 hour, the 4-hour? You know, or is it continuing? Like, are you in expansion mode on the higher time frame, and then what about the higher time frame than that, and then the higher time frame than that? Because everything is trading within context of something bigger. Dude, my cat is like scared of the thunderstorm. He's just meowing. I don't know if you guys can hear it or not. So you said lost 2%, but if I risked another 2%, I'd be 8% up. You know that's not the way to think. 19,380, nice target. This 1 hour order block that's over here. Maybe you're on a, I don't know where you see a 19,380 to be honest, unless you're going lower than a 1 hour. Link and, oh wait, well, I missed your question. Oh, you did, I'm sorry. Bro, I'm experiencing some point with ICT concepts. I'm pretty good at analyzing the market in terms of where it's likely to go, but my problem is I'm quite often taken off within high time frame price delivery array. So I'm guessing what you mean is maybe something like this. Like here's your zone, and price comes into it, and you're watching, and it comes out. And you say, I'm going to trade right here. and you're targeting whatever, price does this. So this happened, if that's what you're talking about, and if I'm going to watch the chat, I'm going to try. It's a little laggy, but tell me if this is not what you mean, because I'm not 100% confident that I understand what you're asking, but if this is what you're asking, happens to everybody, I think it's part of like learning entries on the lower time frames. And what I recommend, and for first off, when I'm looking at this, what do you really see? You see a nice smooth area where there's probably gonna be a lot of stop losses. So you have to watch for a rate on that. First of all, you don't want to have your stop loss in an area that is likely to have other stop losses, except, you know, stop losses using the logic that you're using. So let's say we have some price action like this, but let's say there's an imbalance right here. So again, price moves to move down here. I'm sorry, price moves to an imbalance, right? And we've probably taken out some liquidity, getting it down here. So we took out liquidity. Price is going to move to an imbalance, and then where's it going to move? Liquidity. So once you kind of clear the way, so to speak, because you've already moved into this fair value gap, and once you have a displaced push down here, and you see a consolidation, then you get a displacement up. You know, you might look at this as bearish structure, but you're operating within this higher time frame range. So once you get a displaced raid, and then a sharp move back away from that, inside your POI, that is when you're ready. And this is where I think that I know I had a hard time, because you know, a lot of stuff will teach you it's just super mechanical. You know, you'll just see this. Like, everyone's gonna be like the famous fucking, right? And it's not always like that. This is a concept, right? The concept of this, the components of it, are a push into the point of interest, another push sweeping out those stops. Now that may look like this. It may look like this. It may look like this. You see what I mean? It's not going to be as clean cut as that. You know, the components are still the same. We see a push down, displaced push under it, and a push out, just like we see here. So right here we see the same thing: push down, consolidate, displaced, push under it, and push out. You see, it's not always just this little W. That is really easy to display, and sometimes it is. On the higher time frames, you're more likely to get that. But when you're trading like 1 minute and 5 minute entries, you know, it's usually not going to be that clear cut. It's usually going to be some bit of consolidation, and then you get that displaced push, and then the push out. And even this is clean. Like, this is clean. But the whole idea is you want to push in the point of interest, and you want to engineer liquidity, and then seek out that liquidity and confirm that that liquidity is being utilized by a breakage structure with displacement. And the displacement is the most important part on both ends, the raid and the push out of it. So you wait for a stop hunt, and still there's another stop hunt. And after you're taking off, price goes in your direction. I would guess that it's probably that once you get that stop hunt, you're not getting displacement out of the stop hunt. That would be my guess. If you want, you can tweet me like an example, and it'd be easier for me to give you advice on it. So not financial advice though. It's a link. Let's look at. Oh, the cat needs some treats. Dude, he's fucking spoiled, bro. This cat is fucking spoiled. Honestly, bro, it's actually my girlfriend's cat. But I never am like been a cat person, but I love this fucker. He's cool as fuck. He's like a little dog. He'll actually follow you around. He doesn't ever scratch you. But he's a little prince, bro. My girlfriend, it's like, she fucking loves that cat. So with Link, start on a weekly, we can do a monthly because Link has a lot of price action. So Link on the monthly didn't tap into this order block right here. So we will, actually I'm gonna need to do this. It's gonna make it disappear. I'm gonna bring it back. So the monthly order block there. So, I mean, ideally, if we wanted to see a big push out of something, we want to see it there. I mean, but you have to remember, you know, we do have this monthly fair value gap. We've traded in and consolidated in for literally 6 months. So now if we look at the weekly in that context, the main thing that I don't really like about it, and we talked about this with Link a while ago for like long-term stuff, is we have this range. So like, for instance, if I really want to see a nice reversal, and this could be something that's like cooking up that would actually be very nice. You know, we have this range right here. There's liquidity engineer on both sides. So I want to see two things happen. I want to see a let me move this up. A massive expansion off of the equilibrium, right? That's an old ICT thing, but then it's just reaching for one of the sides. So what I'd really like to see, because often, you know, price is going to be expanded, it's consolidating, so we're likely to retrace or expand from here. And that's obvious. I don't want to be that guy, but when you look at the price action below, I would say you're more likely to retrace, but I would want to see a push down into this. That would be the on a high time frame level, that would be ideal. And you know, it seems like we might be reaching for those levels. But we took out this low, we failed to displace under it, so we could see this high be targeted. So if we go down to a daily time frame, what do we have resting above that? A nice order block on the daily. So I think this is a good draw on liquidity for Link. So I would be bullish on Link till $7.80. Might be a little bit of a stretch, but that's just based off the weekly time frame. We have a lot to get over. I don't think it's going to be just like overnight. And the daily structure is overall bearish, but I look at this as a rate on stops. And this range, these lows have been protected for some time, so I don't know exactly what it's going to take those out. So that would be my high time frame look at Link. Now, the other one I think you said was Litecoin, correct? Gold went crazy, bro. And no problem, man. Just tweet me and then I'll what's the next Link and Litecoin, and then I'm gonna do Litecoin, and then I will do UJ, and then if you tweet me, I will do that one, and then I'm gonna be hopping off here. I actually got my girl. I got her office. I got her birthday is coming up in a little over a week, and I got her office, like all her stuff to set up the office. And I've been like hiding it in the garage, and she's working today, and she won't be back till like 5. So I've already I got a Secret Labs chair. It's like a pink one, and then I got her like a desk and a bunch of other little like lights and designs, and I'm gonna set it up for her. So I need to get off here and get my ass in gear. Her watching the stream, yeah, fucking right. She fucking hears me talking off. She's not watching this. I say that, she's gonna come and be like, "Oh yeah, like, you said this on stream?" She actually helps me with a ton of this stuff. So she's she manages social media accounts for a marketing agency or an advertising agency. She gets on my ass if I say marketing. She's like, "It's fucking advertising. It's not marketing." I'm just like, whatever. But Litecoin, bullish in the daily. Now it's seen a big push up. So this chart is a little different than everything else, because I'm looking at this like, you know, I mean, Litecoin's a clean chart, right? But I see Litecoin as being fairly bearish over on the weekly. You know, we came down here and took that. So I look, you know, price on the weekly, you know, went from this high down to this low to this high to that low, boom, boom. So let me look at the monthly. We did trade into this order block here. So keep that in mind. Oops. Definitely keep that in mind. Now, if we look at the weekly, to be honest, the weekly price action doesn't look bad, even though that weekly range is bearish. Actually, oh, I thought that was a high. So it came down. I mean, there isn't really a high we've taken. It was a strong high, in my opinion. Now, if we were to like take this displacement, that's a long ways away. If we took out the displacement, I'd say Litecoin's gonna go fucking insane. But until we take that, I look at this kind of as a potential zone. You know, we're at a very pivotal moment. We have these equal highs engineered on the weekly and daily chart. We just came above them. So it's kind of counterintuitive to my other crypto analysis, to be honest. But this chart has also been counterintuitive. It's been much stronger. Now, the daily structure is bullish overall. So if we start to see a reversal up here, you know, I would want to see daily market structure shift, because that's where you're talking about really high time frame stuff. You know, I would be probably looking at a push down into this candle. That's what I'd be watching for, because this isn't something I'd be this is an area where it's like you've met your daily draw on liquidity. So if you're day trading, in my opinion, this is where it gets a little choppy because you came up above here. It's like, now what? So now you can maybe use a 1 hour or 4 hour to try to get a jump on that confirmation, or you could just wait for the daily to shift out and take down a low. I would watch at least like a 1 or 4 hour, because if you look, this to me is also going up for the highs. Right here, because if we look, the structure from here, and we pushed up, we did hold that displacement, so now we've traded back down at the order block, higher highs. Until we fail to displace over high, I'm going to look for another high. But we're getting that area where you're more likely to reverse because you came above those equal highs. No, he tweet me. Where's it at? I don't see it. If you want me to do it on here, please tweet it soon because I gotta go soon. Also, no problem. I enjoy doing the analysis for you guys. No problem at all. Can I shed some light on Nifty 50? Okay, actually, fuck it. I'll do Nifty 50 in gold, and that's it. That's actually it. Unless I'm showing the Discord. LTC looks like a big harmonic. Oh god, it's one of those. Oh god, dude, I swear there's been a couple of these, like the GRT when we played it and Playbit. A lot of the SMC people are about to be like, "The fuck are you doing putting a harmonic on your chart?" I'll just tell you guys, like, I know ICT will like talk shit about harmonics, but that's just marketing. Harmonics definitely work in certain contexts. I don't think this falls into this would need to be different, because if we have a 786 XA retracement, I think that I'm a little rusty on harmonics. I think you're supposed to have a because that's a butterfly. You're supposed to have like an extension, I think. But yeah, I used to use harmonics and SMC together. I don't really do that anymore, but higher time frames they hit. So yeah, 786, yeah, it's a 1.27. I still remember. Those the Playbit OGs know about the harmonic days. We used to mark that shit. But yeah, I mean, well, that would put good old Litecoin at like fucking negative. Let's see. I'm definitely buying Litecoin at negative 82. We have a bullish fucking butterfly. No, but GRT, actually, I just want to pull this up just for shits and giggles. See, it's still here. We traded this. I haven't looked at this. Isn't the Coinbase chart. We traded this equity. This is like my old TA, actually. Surprised it hasn't been deleted. This is where people are like, oh yeah, harmonics don't work. And they usually align with SMC, but like the whole life of it on Coinbase, which is where it ICO'd, was a literal massive fucking bullish bat if you use a 7% error rate. So on the higher time frames, I used to use a higher error rate for the B point. But we had it was right at over 7% of a 50% retracement, and then a very close to 886, which is an ideal bullish bat. First target is going to be equilibrium, but we target that order block right there. And you see it does work sometimes. People are like, oh, that doesn't. So a lot of newer people, and this is something we talked about a little bit in the Discord and chat. There's a lot of the ICT trading community. It's new to trading, and it shows because they bash other styles and they kind of fall for things. I trade smart concepts. I think that it is the more precise, and it's definitely got me farther in my trading. But I will go ahead and tell you, it is not the only way people that trade make money. That is something that ICT says because he wants people to worship him. That's just me being honest. But everything he says is true as far as like the analysis. I do believe the markets are manipulated, but to say that all other strategies are just completely stupid, that's just an ego trip. Now I will say that they're not as precise, and oftentimes when they do work, they are paired with smart money concepts. But newsflash, whenever there was a big move, there wasn't just one way to catch it. So there's a little just peace of my mind right there. Now, back to your heights, yes. But back to 786 is a Gartley. No, 618 is a Gartley. And then 786 B D point. If I missed, let me see. I think, and that might be what you're saying. 618B, 786D. What is it? Yeah, so it's 786. Yeah, that's a Gartley. Maybe that's what you were saying. But that when we were talking about a 786B point. Yeah, Glacier still trades Harmonics. Glacier was actually the one that got me on Steve Carney forever ago, or Scott Carney, not Steve. That dude's a fucking, he cons motherfuckers. Like his indicator was such fucking dog shit. Cause I just tried it. It was like, this is such a fucking dog shit indicator. And it was for Harmonics. It was a long time ago. That was a long time ago. It's pretty crazy to think about. Don't I measure the equilibrium of consolidation from the bodies of the candles? In some context, yes. So if I'm trying to use like time and price, I do. Like for weekly power of 3, I do. For daily power of 3, I do. But if I'm talking about just an overall range, I don't. Like on a daily chart, I don't do that. But for time and price theory, I do. And yeah, in core content, ICT explains that the right way, but I saw him using Wix. Yeah, go ahead and get used to stuff that you see in 2016 or even 2022 that will be contradicted. But there's a lot of gold to get from that, but just don't fall into the pit of just like totality, so to speak. Now again, I've completely lost my fucking train. Oh yeah, Nifty.
That's what I still don't understand. I use bodies for high time frame and wicks at low time frame at this point because
Yeah. Go ahead, my bad, I interrupt you.
yeah, I mean he just flip flops back and forth. So I mean it would make more sense for bodies to respect high time frame than low time frame on fibs to me.
Yeah, and you know, anything like that, there's always it's kind of like a badass car, right? So like if I give you a Z06 Corvette, it's just stock. One person is gonna tune it different than the other person. Now, are both cars gonna be fast as fuck? 100%. Is one car gonna be better at some things than the other? 100%. So same thing with trading. You know, you can learn SMC or ICT concepts, but you have to put your own touches on it based off of what you trade, when you trade it, what time frames you trade in order to be at maximum efficiency. So that's the best way I can put that. So now for Nifty 50, I mean, it doesn't look bad here, to be quite honest. Sell side down here. Now, on a monthly level, or on a monthly viewpoint, it's just like at some point, this is gonna come to the downside. But I haven't really seen. I mean, you could look at this as a displacement on the downside. Price traded back up into this order block. The daily, we got another move to the downside. Price traded back up into, I guess if you use these whole 2 candles, that order block. You're taking this liquidity but not displacing under it. Seems like this market is closed. Wait, is this even the right? What's the day on here? Okay, yeah, it's just closed. So I mean, you're not displacing on that low. That looks like a liquidity grab. And also, there's a lot of volume imbalance right here. This void is now filled. So I see 2 sides of this. Based off of the fact that it's just ripping at all-time highs, at some point you got to retrace. And we've taken out these buy stops here. Market structure shift. Not really a fair value gap. There is an imbalance right here that was made. Looks like it was traded into. Then if you go to a daily, after coming to that level, shift down. But that could just be seeking out this liquidity. So what I would do, if I was trading this, I would watch like a 1 hour or a 4 hour. And the 1 hour looks good. The 1 hour looks like it wants higher. I would say the draw on liquidity for this is going to be that right there for low hanging fruit. If you're day trading this, I would try to trade into that high right there. Revisit after that. Gala short entries. I wouldn't even try to pay attention to trying to short a Gala right now. I could be wrong. I might come back next week and say, dude, I should have shorted it. But ICT concepts works on crypto or not, or partially. It definitely works. I think it's lower probability than something like ES though. Hi, I am a good ICT trader on demo. So will I pass the funded challenge? I'll be honest with you. You might be a fucking, badass on a demo and then get fucked up in a challenge, because the difference between that challenge and the demo you're on is one has stakes and one doesn't. So there are a lot of good analysts who are awful traders, and it all comes down to trading psychology. So I can't answer that question for you, but when you really think about it, if you're honest with yourself and ask yourself, do you have good trading psychology? Like, have you ever traded with real funds, even if it's just a little bit of money? One thing that I think is a good idea for people to do, because there's a lot of people in a space where funding firms are much more popular than when I started trading now, and so we started with our own money, and you got used to trading with your own money and losing your own money and making money, and that seasons you and kind of calluses your mind and makes it more a familiar feeling to manage a trade that's real. Because on a demo account, you're going to hold the full TP every time. You're going to get stopped down, re-enter again. There's a lot of stuff that you're going to be doing differently on a demo than a live account. So I always say to people, if you've never traded with any live funds, like 0 live funds ever, start up an account with like something that you're totally fine to lose, like like $50 or 10. I mean, that's probably not. I don't know. Everybody's different. Whatever that number is to you, where you just would literally, if you lost it out of your wallet, you wouldn't freak out of. Do something like that and just start like, you know what I mean? Like, just get something real going, because psychologically, you have no idea. Just because you're on demo, like, do you know what it takes technically? Like, and I'm saying technically as in a chart to pass? Yes, but can you execute it? Because I've seen a lot of people that know what to do, but they don't do it. You have to have the plan, and the only person who knows is you. Yeah, exactly. Market maker, false, bullish, bearish flags are nice when the price comes to the high time frame price delivery array or the area of distribution. Sounds good. Oh, UJ, I got you. That was one I forgot. My bad. That fucking emote is funny. That'll leaky. I like that. Yeah, I mean, UJ. The way that DXY is looking, it doesn't look like this is getting much of a reaction. I had an alert set under this. Those stops are not getting bought up. Or if they did, it all happened right there. So I think the draw right now is this weekly order block. So bearish on a weekly time frame. Same thing on a daily. I'd look at this fair value gap. I mean, I hate to be that guy. It's like, yep, we're moving down. The fucking candle's like massive. But that's just where I would revisit it. Now if we displace under this low, watch for a reversal and a not even a reversal, but basically watch for the beginning of a retracement, because really, on the weekly, UJ is already bearish. And what the Bank of Japan did, we're not going to get an economics lesson, but they're basically eliminating a money hack that a lot of countries were using with the yen. So, the yen's going to be very strong. And the dollar, if DXY starts breaking down, and if we start seeing some bullishness based off of inflation starting to lower, which I don't think we're anywhere near a bottom, but that would put this chart in a bad shape. And I mean, if you look at it on the monthly, came up and took this high right there. Yes, we see, this is a good example of like displacement's hard to be mechanical. Yes, we closed above that. Do I say we displaced above that? No. I don't think that's displacement. I think that's like, yep, goodbye. And if you look, we had this order block that we traded into and couldn't close above it. So to me, just looking at the monthly chart, yeah, actually, the more I look at it, I think this is going to go lower. But the most local draw is here. You might see some upside from there, but overall target for UJ on a monthly level would be 126.36, and that is on, what feed am I on? Hold on. FXCM. Yeah, and the reason for that's the first monthly, and this is just prices for outcome. I look at the monthly similar to how I look at other things when in terms of retracement, because prices expanded. We saw some consolidation in the lower time frames, now retracing back down where? Back down to discount prices. Now, if this was to go higher and resume this fucking maniacal bull run on UJ, I think it's going to come to a discount first. So I think that low right there on the weekly could be a good target. But the draw is the order block, and that's how I use low hanging fruit. If I see price pushing down, if I was just in a short right here based off of the low time frames, I wouldn't target this. I'd be getting out here at those first areas, because price can, it's still going to be bearish. You might push down in here, and then it could sit here, do this, and make equal lows, and fucking run up, hundreds of pips, and you just got clocked for no reason. So low-hanging fruit is always good in my opinion, as long as you're getting 2 to 3 R, sometimes even lower if you're whatever you're doing, you're very confident and consistent. It's all about making money. It's not about catching tops and bottoms every time. Wait, let's go to a lower time frame. I mean, if you don't tap into this and you just kind of reverse from here, I mean, if you leave this fair value gap, I'd be looking for shorts in there because it's that kind of silver bullet, so to speak. 4 hours obviously bearish. And you took out the, and this is a good way to look at something like, all right, whenever I say is bearish or bullish order flow being respected. So we took out buy stops, failed to displace, and this is a good example of displacement too. Failed to displace, so what? You take out the low. Now on top of that, we were bearish in the daily, and what were you moving into? Daily fair value gap. So again, push into it, even though we came out of it, massive pushback, and after we took out liquidity here, took out liquidity into a higher time frame point of interest. I mean, it was a 4-hour imbalance too. We took that out. Did it tap into these lows? So that was what some people would call efficient price action, so to speak, because it didn't tap it the first time. I don't really use like the peaks and valleys method for fair value gaps, but some people do this. Or I guess they would. I'm not exactly sure. I've seen people talk about that. I don't use it. But the main thing is we took liquidity in a higher time frame POI, and the market structure shifted. All right, this is the same thing if we're looking at a 1-minute entry model. It looks exactly the same on a 4-hour, but yeah, I would look for price to draw down to that 128.609. Thanks, man. Trying to adapt the smart money concepts in your view, alignment with mine, have a boost of confidence. Cool. Gave you a boost of confidence. So I said, what ICT teachings touched my heart and filled remaining gaps in your understanding to be profitable? Did you go through any charter videos? If you're talking about 2016, I've watched every last bit of it and a lot of it twice. I would say some of the most valuable ICT is if you're new, month 4 of the 2016, which is the core content, and then month 5, 6, and 7. Those, especially if you're trying to day trade and stuff, those are all very, very powerful parts of it. But I'm just gonna be honest with you, just be prepared to sift through a lot of wasted time and a lot of talking about why ICT methods are better than others and why other trading sucks. That's kind of like my whole thing is I try to like teach you guys stuff that the valuable stuff without sitting here and talking about stuff that isn't as valuable to you guys directly. So my strategy, the 2022 or 2016, I would say neither really. It's really just I take, again, it's kind of like earlier talking about the car example. I just take what I see of value, and then I back test it and I see what works better for me, and then I just kind of build off that. You're never going to be very consistently profitable trying to mimic something that something else, because you're not seeing through that person's eyes, so you're not going to do everything exactly the same. It's all about putting in the time and effort to test things, to learn them, and genuinely gain an understanding, not just okay, I watched this video, he did this, I'm gonna do it every time. You're gonna get fucked up doing that. Can I analyze EU? Okay, no, actually, I know I keep saying it's the last chart. I've been waiting for that tweet from you. I want to just ask that ICT teachings question because I wanted to help you do chart, but shoot it off now or forever hold your peace till next stream. EU, SMT failed. Let's talk about that right this week. It didn't do much off that on the 4-hour. So it took out the high though. So I think I talked about the bearish DXY, and the overall I wanted to see a draw here. I just wanted to see price go down a little farther. And then this zone we've marked up here, I think this is what you're drawing to. Yeah, I could, the way everything's moving, I could see a little bit more upside on stuff. I think those weekly highs on a weekly low, and I'm not saying you're going to go straight to it, but I think on a daily, not a weekly, on a daily chart, I think this is your draw right here. What this reminds me of is ES back here. Let me do, actually. See these highs right here? That's what that reminds me of. And those of you who've been around for a while, remember we had we longed to those highs on that day and played it. But yeah, that's what I would see with EU is drawing upwards. So, you know, look for higher time frame levels. And this is something I used to get so confused by. When you're establishing a draw on liquidity, it's easy to just be like, okay, I'm just doing let's clear my chart. It's easy to just be like, okay, like long. Like, am I saying the 15-minute is going to stay bullish all the way up to this level? I'm not. I mean, it might at this point, you know, but you want to watch for like higher time frame levels. You know, look for, like, for instance, here, like, let's just say a price moved all the way up here. If I can click right. Price moved all the way up here, kind of consolidated, got really close, and then starts to push down. Maybe watch that order block. You know, and another thing that's important is time. Let's say if this order block hits at like 6 p.m., like, don't worry about it. Don't even mess with it. Because it's not going to be a value. The highest quality entries on euro dollar are going to happen between 2 a.m. and 5 a.m. or between 8 a.m. and 10 a.m. That's sometimes 11. That's where you're going to get, you know, the actual institutional volumes those times. So when you're trading Forex, it's really important that you're focusing on what time your entry, because like you need to be, you know, the whole idea is you're trying to trade with institutions and commercials, and they're not trading at certain times. So any tips for journaling or back testing? Yeah, you need to have a trade plan. We actually just did a class on this in Playbit, like I think either last week. I think it was last week. You need to have a very if-then plan. So, like, for instance, you know, you need to have like your routine, which is your markup, what you do on all the charts. You know, your monthly, weekly, daily, 4 hour, 1 hour, whatever time frames you trade. You need to have a very written out, like, checkbox style plan that's in front of you while you're testing. You need to have a specific trade model. You know, okay, maybe like somebody said earlier, I'm trading 15-minute points of interest with 3-minute confirmation. You need to have a specific time of day. This is something that a lot of people mess up, is like they'll test a model and they'll just watch that chart and they forget, you know, you're testing every single opportunity, and, you know, in real life you might only be trading during New York, and then, you know, that model might be profitable, but then during New York it's not profitable. So, you know, whatever, everything needs to be very, very pinpointed. Now, if you're trading a discretional model, which is something I've been doing recently, kind of just trade like, you know, it's just my other light died. So let's see. So like this right here, it's just like a discretional M15 execution, but I'm only trading it during New York. I'm only trading the S&P, and I'm just basically looking at price how I would if I'm, you know, trading like the way I like trade and executing on those execution. Now, I would recommend Forex Replay. You can, it's really cool. You can build a strategy. I did a whole lesson on this in the private server. You see, I've tested this one for 263 days. This one's a little skewed because I tested a lot of different. This is just a very wide. I was using some 15-minute entries on this. It was actually up a lot more. It's only up 12%, which is not the greatest for that amount of time. But this one I like a little bit better. It's up 18 days, up 11%. So this one's like, okay, that's gonna pass funded challenges much quicker. But yeah, just my tips for journaling and backtesting. You need to have an if-then process. You need to have a routine of what you are actually going to do before you trade in a real market, and be very consistent, because if not, you know, you're just skewing your data. As I said, I just wish I had those meal preps you got on your hands. Too bad there's none in NYS. I don't know where NYS is, but they ship. Clean Eats is who I use. Do I try the Judas swings plus SMT? You know, I need to get back to it. I need to test it now that I've been back testing more recently than I have in a long time. But I was testing some on US30, because, dude, US30, whenever, like, if you get SMT on a 1 minute or a 15-minute and it gets a fair value gap, like, that shit's gonna go most of the time. So US30 is one to test that out with. NZDCAD going to the 1 hour time frame. I never even watched this pair. I don't think. Maybe I have. I don't remember it. So you took out those stops and moved pretty aggressive. I would say overall on the daily, you're in retracement mode. I mean, this has a lot of room. If I was a betting man, I'd be looking down here. Overall, it's gonna take a little while to get there. If I look at the daily chart, move down, very wicky. So what I would like to do is map this out, and then I'm gonna go to 4 hour, see what's in there, and we have a nice rejection block. Price traded into 1 hour. Some awful price action on the 1 hour as far as this confirming this, but if you use it 15 minutes, it's gonna be a lot clearer. And I don't mean to say that like it's it shouldn't be trades. So you see that confirmation out there. I will say that these highs are very clean. I don't like that. And again, I mean, I don't want to skew you from your bias because I don't know. I know you said NZCAD going to the 1 hour time frame. I don't want to skew your bias, but I could see this going down further. But those highs are just like, and then look at this too. Sometimes, they may not get tagged, but for me, I don't know, man. I don't like that. And we also have this big push down right here. This fucks it up. If it wasn't for this, if there was a little more consolidation here, I'd look for a market maker model. But I don't like it. It's not clean enough. It's just too long. But I could see a push up into these highs. This is something where it's like I could see it going either way, too much so that I personally wouldn't be involved for my model. But I also do see a taking out these highs and then failed to make the lower low. So see right here, took out those highs, failed to make a lower low. So I'd say you're drawing at least to this high. New York State. Hell, I'm sure they got something up there, but you can get clean eats is what I use. They'll ship. It won't be as fresh, but they do ship. Also, guys, I gotta go. I really gotta go. I've stayed on way longer than I planned to. I gotta do this for my girl. I will see you guys on for the private Discord. I'll see you guys on Saturday, so we do our weekly class. And for everybody on YouTube, I'll see you on Tuesday. If you want to join the private class, you can use the link in the description and use code CASPER all caps. It'll get you a free trial. And hope to see you guys in there. Until Tuesday, I'll see you guys later. Peace.